Hello. The company being analyzed today is C2C Advanced Systems. This is a company which makes software solutions or tech solutions for both defense and non-defense sectors. So today we're going to analyze the company's financials. What is its future growth looking like? What does it actually do? So let us start. First, we have the financials of the company. So here we have the financial snapshot from fiscal year 2023 to fiscal year 2025. We have the revenue from operations in millions of rupees. So we will compare this in crores. So in fiscal year 2023, the company had 80 million rupees in revenue, which is around 8 crores. It had, how much is this? 410.6 million rupees of revenue in fiscal year 2024, 41 crores, and in fiscal year 2025, 115.1 crores in revenue. You can see the growth rate for fiscal year 2023 compared to previous year, 2000% growth rate. Fiscal year 2024, 400% growth rate. Fiscal year 2025, 180% growth rate. Growth rate is slowing down a bit, but it has slowed down. Of course, the rate of growth has slowed down, but it's still massive growth. If we go down to EBITDA, EBITDA has grown from 3.8 crores or 38.4 million rupees to 414.2 million or 41.4 crores. EBITDA margin 36%, 44%, 47%, 36% for fiscal year 2025. So high EBITDA margin company, though that is also declining. Then we go to the profit after tax. Profit after tax has risen from 2.88 crores in fiscal year 2023 to 28.84 crores in fiscal year 2025. Profit margin of 25.1%. This has also seen a decline. Let us see if they can maintain a good percentage in the future. But for at least now, nice, nice. Now, C2C at a glance. Company overview. Incorporated in 2018, C2C develops proprietary software driven systems and subsystems. The offerings include mission critical defense applications, digital transformation products, and dual use solutions for industry. Dual, u- Dual use means services or solutions which can be solutions for both industrial purposes and military purposes. So, two uses, dual use. So, what does it do? It develops proprietary software driven systems. Then, C2C technology helps warships, drones, and defense forces make faster and smarter decisions using real time data and artificial intelligence. It also creates industrial control software that helps factories and power plants run efficiently, predict problems, and reduce downtime. So, I don't understand the technical stuff. Main thing I can understand is that it caters to defense, then it caters to industry, and essentially it tries to make them smarter, tries to make things easier for them, more efficient and more cost efficient for them. Basically, that's what it does, from my understanding. Then, two segments are defense and industry 4.0, basically industry. Let's move on. First, we will discuss the defense vertical. All right, the defense vertical is the first vertical or business segment. The company has design capabilities across the entire spectrum of defense, security, and aerospace software intensive systems and subsystems. So it can be Navy, it can be even space, it can be the Army, it can be the Air Force. All of these places, so all of these different segments, it can be security. All of these it can cater to, its services can cater to. Some of its services include, all right, CMS, Combat Management Systems for Army, Navy, Airborne, and Autonomous. This, I believe, like a complete combat management system. I don't know what it means, but I think this is the only company, the company is mentioned. They're the only one in India who actually provides a complete combat management system. They have claimed it. Okay. Then, real time battlefield command, control communications, anti drone solutions, all right, radar distribution systems, integrated platform management system. So a lot of services, and basically it can cater to a wide variety. It's trying to become a one stop solution for basically like defense companies maybe, or like the defense of India, yeah, the army or the navy of India. It's trying to become a one-stop solution for them. Basically, it can provide them everything. So why go to any other competitor? Yeah. Then we have the defense vertical offering across platforms. So it can provide services to airbornes, to the the air force. It can provide services to the air force in the form of air defense systems, drone command and control, anti-drone systems. It can provide services to the army in the form of battlefield management, tactical communication, logistic maintenance, and more. And it can also cater to the navals, to the navy, by providing combat management systems, integrated platform management, meaning one platform where you can do everything from one platform, like a centralized platform. You can manage everything. It's integrated. So different parts of the Navy can be integrated there. Then we have the industry vertical. All right, this caters to the industry. Some of the services of this business segment is, for example, virtual supply chain, control and automation systems, artificial intelligence or machine learning based analytics, data analytics, cybersecurity, okay, IoT integration, which is basically Internet of Things. That's a network of devices which have sensors embedded in them. For example, security cameras. Security cameras, they can take information and that supply that information to the main system or whatever. But IoT is a big thing. Virtual supply chain, control automation system, a lot of services catering to a lot of things, basically. A diverse number of customers it can have. So that's a pretty good thing. Then moving on, moving on. C2C has successfully delivered over 250 projects and is committed to a CAGR of 100% annually for the foreseeable future. So, for the foreseeable, let's say a near future, it's committed to a revenue profits and call that growth, revenue growth, I believe, revenue growth of at least 100% each year. So, it's trying to double, from whatever its revenue was this year to double that, then double that. So, 100% growth each year, which is pretty massive. That's really massive. Yeah. Then very important, summary of proposals or bids in process outstanding. So these are the projects and the amounts that it is currently either proposing for, it is bidding for, or it's very soon about to bid for. You can see we have in crores rupees, Defense India 450 crores, Defense Global 300 crores, Industry India 20 crores, Industry Global 110 crores, Digital Transformation India 115 crores, Digital Transformation Global 98 crores, Technology Services 51 crores. Total proposals outstanding, the things it is bidding for is 1144 crores. Important thing, it has divided things into kind of four things. We have defense, industry, digital transformation, and technology services. All right, it's divided everything into four different segments. And see, global global sector, it seems that the international countries, international business is an important component for them. It's important for them. They must get some money from international too. All right, so international economy is important for them. The total proposals outstanding are 1144 crores, and large projects defense potential is 2700 crores. So I don't exactly understand this. Like live proposals, large opportunities defense, they have posted this as something different to their already like defense one. So from what I'm understanding is the earlier Defense One, Defense India, Defense Global, it's small. It is small. These are the bids, like projects it is bidding for, and it has massive opportunity in them. So 1200 crores, 1000 crores, 500 crores, total opportunities being 2700 crores. Live proposals. They have said it's live proposals, so I'm believing they're trying to say that these are projects it's currently bidding for. So massive order book pipeline, massive growth projects it is actually expecting in the future. So that's always good to know. Then let's move even further. Yeah, days sales outstanding after supplying a product, after supplying a software system to its customers, How many days does it take for the customers to actually pay them back? So we will focus here on days sales outstanding, the DSO. That is what it means. 345 days. 345 days. So after supplying a service on basically credit or a software system on credit, the customer can pay them back after 345 days in fiscal year 2025. Fiscal year 2026, it's still moving, but it's expecting that by the end of fiscal year 2026, 230 to 220 days. By fiscal year 2027, 160, 180 days. By fiscal year 2028, 120, 150 days. It's expecting that customers, especially the international customers, actually, the international customers, basically customers as a whole will start to pay them higher and higher. And I think international customers on average, they pay faster compared to Indian customers. So yeah, it seems that the day sales outstanding figure is set to improve a lot. The lower this figure, the better. And this figure, the lower it is, it significantly boosts cash flows. Then the business landscape. Global defense budgets are at record highs, and India is the fourth largest spender. A structural shift is underway. 70% is combat ecosystem and 30% is combat effort. What I'm interpreting from this is that the global defense budget, 30% is for the core combat abilities, but 70% is the combat ecosystem, which includes software. So keep that in mind. And finally, we will pay attention to the company's on call, where management itself has given some words. So one thing they have said, Mr. Uh, Ganapati Subramanian, who's from the company, we expect turnover to be in the range of 250 crores plus for fiscal year 2026. So the revenues it posted this year, how much revenue did it actually post this year? You know what? We're going to first see that. So these are the profit and loss statement of the company. 115 crores, fiscal year 25, 115 crores of revenue. So going from 115 crores, it's going to 250 crores. Okay, yeah, it's delivering on that 100% growth now. Hmm, nice. So it's expecting massive growth. Then we go a little page up. Yeah, about the cash flows. It is saying that we estimate that in somewhere in 2027 we can be consistently. I'm saying when I say consistent, month after month after month, we should have free cash flows. That is our aim in all of what we are doing. So they're expecting somewhere in 2027, month after month after month is going to be consistent free cash flow. Free cash flow, that's a great news. So cash flow positive, not only cash flow positive, they're mentioning free cash flow, which is even like deeper than cash flow from operations. We can take quite some time to explain what is free cash flow. I will need to revise on that myself, so you can check on Google. It's a very interesting and a very important term in finance. Then a question has been asked by an analyst. The company had phenomenal profit margins in the first half. Does the company expect to have similar profit margins in the second half as well? So we will take a look at the first half, in the latest quarters, the profit margins, because we saw EBITDA margins declining. We saw that the net profit margins were declining as EBITDA margins were declining from fiscal year 2023 to 2025. So let us see. First, let us see the answer. In any case, I see it as similar to first half. From what I can see, what we have today should be similar. So the first half of fiscal year 2025 profit margins, the second half should be similar and like going onwards. Yeah, in the second half of fiscal year 2026, margins should be similar. So let us see the latest margins. Okay. We have the quarterly results. We have the quarterly results. Okay. We have sales in crores. We have operating profit and operating profit margin. We saw that was falling. Unfortunately and luckily, look at this. It's increasing. 32% in September 2024 quarter, March 2025, two quarters it combined, 39%, and September 2025, 45%. First of all, I believe these are half yearly results. This March, you see, you can notice there is no June, here. There's no December quarter here. Why? Yeah, yeah, yeah. Yes. So March 2025 is combining December quarter and March quarter, quarter three, quarter four. September is combining June and September quarter. Basically, these are half yearly results. September 2025 means here quarter one plus quarter two. Yes, quarter one plus quarter two of fiscal year 20 is the fiscal year. Here, the March one is signifying quarter three and quarter four of whichever fiscal year it is. So basically, 45% operating profit margins, EBITDA margins for the first half of fiscal year 2026, and it's expecting this to continue. So, according to management, we should see investors should see 250 crores ish of revenue for the fiscal year entire fiscal year, and operating profit margins similar to 45%, which is a big improvement. So that is it. We can also see the cash flows of the company. It's not a strong suit. Cash flows focus on cash flow from operating activity. March 2021, 2 crores in operating cash flow. Then you can see minus 4 crores, minus 5 crores, minus 35 crores, minus 115 crores of operating cash flow. Again, in mid of 2027, it's expecting. So, as a summary, company is expecting to be cash flow positive by mid 2027, 100% growth in revenues for the foreseeable future. And as we saw earlier, right? Remember, we saw earlier that the profit margins were declining, right? Here's the profit and loss again of the company, and not the quarterly ones, the yearly ones. Operating profit margin, pay attention, 48%, 45%, 36%. But we saw the first half 45%, and it's continuing to hold up to 45%. So improvement compared to fiscal year 2025, 100% growth, massive, caters to different segments and trying to become like a one-stop solution for defense companies and like the Navy, Air Force, and the Army of India. That is it. Bye.